Okay, I think we're going.
We're live.
Okay, let's call to order this Finance and Audit Committee meeting for Thursday, March 14th, 2024. Teresa, will you call the roll?
Trustee Cook,
Here.
trustee Johnson,
Here.
trustee Pandolfi,
Here.
trustee Whitehall, trustee Thies.
Yes.
We have four.
Okay, you have the agenda in front of you. Any changes? Anything to add? Not, I'd ask for a motion in a second.
So.
Second.
Second.
Teresa, will you take the vote?
Trustee Cook,
Yes.
trustee Johnson,
Aye.
trustee Pandolfi,
Yes.
trustee Whitehall, trustee Thies.
Yes.
Motion carried.
Okay, the minutes were posted. There were a couple of corrections this morning, depending when you looked at them. Minor corrections, just clarification, a couple things. So
I read it last night, so, or yesterday afternoon. Of that nature.
the term I think was IBR was changed to IBNR. It's a technical insurance term. In 5.4, there was a sentence that referred to me approving the new payroll format. I changed that sentence to be the committee received the new report format without requesting any changes. And then 6.1, I added it regarding the 3:30 startup time. I have a clause after that says subject to full board availability. That was it.
Good.
So I need a motion and a second in the minutes.
I move the minutes of our last meeting be approved. Second.
Teresa?
Second it.
Trustee Cook,
Yes.
trustee Johnson,
Aye.
trustee Pandolfi,
Aye.
trustee Thies.
Yes.
Motion carries.
Okay. Michelle, are you on yet? Okay, she's late. Let's proceed. Jeremy.
Yes, good morning.
Right.
We'll start as we normally do with our balance sheet. Gonna go to the next one. Just summarizing cash and investments for you. The prior period total cash and investments was 69.55 million. The current period is 58.1 million, so reduced cash and investments by about 11.44 million. Other than that, the assets and liabilities all look in line with what we've reported last month. No major changes. Just to note, as we work through the rest of the reports, you'll see this, but the current year surplus deficit is a positive 11.19 million. Last year was 17.65 million, so that's about a drop of 6.47 million in revenues over expenditures year over year.
And I think that's bulk of that is the capital plan spending, right?
Yeah, that the transfer.
Well, just in terms of the cash reduction and surplus.
Moving on to the next statement of taxes that we've received. All three counties are summarized at the top. And then we go into detail county by county of what was provided from the county. So all three counties have submitted $62.5 million to the library so far this year. At the same time period last year, that was 58.4 million. Hopefully a 7% increase compared to the prior year. Compared to budget, we've collected 96.85% of our budgeted revenues. And last year at the same time, we had collected 95.31. So our collections are roughly about 1.5% higher than they were the same time last year.
I have a question.
On the delinquencies, just this is historical, about how much on average do we collect of the as of this date, for example, of the delinquent amount of taxes. Coming up.
You mean compared to budget or?
No, just historically, how much of, I look at that 2.5 million. Okay, so on average, how much in our fiscal year will be actually will be paid?
Yeah, I haven't done a real deep dive into delinquent taxes for the past several years. So what I can tell you is that delinquencies are up about 30% over the same time period last year. The challenge with taxes is it just happens to do with when people pay them. So we can only receive what's been paid. So this could be more of a timing issue than an actual.
Well, and that's it. I didn't know if we had some type of historical record of.
I have, Bob, the date I had, we used for the 2022 levy calculation, and the fiscal 22 back taxes was 2,150,000. We had projected for this year about 2.2 million. So at least as I recall, that's like, if we budget, we should be budgeting the low end of things.
Yeah, but I just didn't know if we had some calculation as of June, for example, how much of that actually ends up being paid in March and April and May, but if at all, but.
Jeremy, what is our collection against current taxes? You know that? I know we use 93%.
Yeah, I think we're closer to 95 based on the audited figures I've seen over the last 3 years. There was a dip in 2020, which I think everybody can expect. But the 3-year average for the last 3 fiscal years was about 95% of current taxes being collected.
Right ahead.
So on the real estate, you all know, if you don't pay your taxes after 3 years, the county has the authority to sell that property and then reimburse the tax entities their, fair share of whatever that sale price is. That's not true on the personal property. And so that's one of the reasons why delinquencies are so volatile, is sometimes people are paying them to keep it from entering the tax sale. Sometimes people are paying it so they can license their vehicle. So any 1 month compared to the next is really difficult.
Well, and that's fine. I may want to look at 10 years worth of data at some point just to see what is there kind of an average of how much ends up being collected in the fiscal year. But that's I want to talk all morning on that. So that's my okay. So
Moving on to the next schedule is the general fund. Taxes are about 8% higher than they were in the prior fiscal year at 4.1 million. Total revenue is up about 8% at 4.29 million. On to the expenditure side, payroll is up about 8% or 1.7 million compared to the prior year. Library materials are down about 6% or 393,000. Library programs are up 7% or 30,000. And library operations are up about 10% or 591,000. All told expenditures are 5% higher than they were in the prior fiscal year at 1.92 million. And just a note, you had asked about the 350,000 that was set aside for additional capital maintenance. We went ahead and made that transfer just to get it out of the way. So that transfer has been made. So the net change to fund balance is a positive $11 million in the current fiscal year.
Just regarding the budget, and I know after we get closer to year end, it's a push, but is the budget a level spread, or do you spread things based on where you think the expenditure is going to be? Excluding revenues.
Right. I believe I talked to Quan a few times about his spread, and I think what he's done is taken the historical spending percentage. So if 7% of the budget is historically spent in one given month, then he would take 7% of the current budget, and that's on the spread.
Okay, all right.
We might do a little bit different smoothing of that next year. But, that historical smoothing doesn't allow for those kind of things are gonna happen. So we may make small tweaks to the budget based on that.
Well, and again, this is something, presentation is something that's fairly recent, so
Yeah.
this was not the form of presentation, at least 2 years ago, I guess. We started this sometime last year, before you, obviously, before you came on board, so. Okay, looks good. Any questions on this, Yummy?
Move on to
Hearing
the
none.
next page. If you have any questions, let me know. The next page is the capital project fund. Again, you see the transfer is now 9.35 million as budgeted. So revenues and transfers are 10.14 million. Expenditures are just over 10 million. So we've got about a $41,000 positive balance year to date so far.
Can you check the percentages on the transfers and the interest income? Those formulas,
Oh, yeah.
those formulas don't look correct.
Yeah.
And, and I'm assuming the Harvey Jones, I know it's done, because I drove by it last time.
Yeah, it's all just about when the bills come in.
Okay.
So as of February 29th, that was all we had paid. Get into the capital plan in a minute. So that's all there. We added the debt service for the month of February just to show that debt payment was made. And then the debt schedule for the certificates of participation listed below. There. Next page is the minor funds, the grants. Nothing to report there unless anyone has any questions.
I do, if is that bottom section supposed to tie up to the detail?
Yes, it does.
Because it shows 288,991, but the detail shows 319.
Right, 319 minus 288 is a transfer in of 30,000.
And the 30,000 is where? In the cash in.
In cash in, it's interspersed by those funds, because we're just showing cash in and cash out. But at the bottom, we're showing revenue, expenses, and then transfers.
All right, so explain explain the transfer in from where?
That was a budgeted thing. I would have to go back and look at the budget to see where I
Is
believe
it
it's
coming
a
from the general
transfer.
fund? Is it coming from outside?
No, I think it's a transfer from one of the community foundation accounts to cover programming at NGC, if I'm not mistaken.
Okay. I don't know how much work that is. It'd just be helpful if the numbers were laid out to where we can see the revenue portion.
So you'd like to see this revenue presented differently than the other revenue?
Well, no, I'm just,
Typically, we have revenue, expenses, and then.
no, I'm just saying on the cash in, if I'm not asking for a lot of work. So I don't know where the cash in, how that's done, period. Because I don't know which line it goes in and how, if it's a matter of 3 transfers, or you're telling me it's in, all of these accounts except for Kaufman, because that's a nice even round number. So just a question mark. So. All right, move on.
I'm not really sure. I mean, I could move the transfers and show it as a revenue, but then it wouldn't coincide with the way the rest of the presentations are made by funds. So
Okay.
keep consistency. And then the last schedule is the health insurance fund. Nothing really to report here unless there's any questions. Everything seems to be going according to the plan.
I did have a question and I raised it about last month about looking at the 2023 plan year because our health insurance is on a calendar year. And we were supposed to, I thought we would have a presentation this month, but I'd like to look at 23, perhaps 22, but this is in the format of what I'll call the statement of activities. And I know 23 isn't closed out yet, but that's the reason you have an IBNR reserve. Just to say, here's what we've initially projected our plan, our calendar year plan to be, here's where it's going to end up. This is a fiscal year presentation that where you have, 50% of one plan year and 50% of another plan year. So I'd like to have that by the next meeting.
Just to help me understand, so what are we looking to assess? I'm still struggling to.
Okay, so in the insurance world, you take things, in the insurance world, you take things back to the, what I'll call a policy issue date. And you do that in order to evaluate your assumptions on pricing and on your claims. So, and I know and you do that against an exposure base. Our exposure base here is a combination of employee count and age bracket. Okay, and obviously male, female family issues. Okay, because that's how they rate, that's how the premiums are rated. So
Maybe if I could rephrase it, I mean, is there a sign of a problem here that needs to be addressed, or or we just?
to me, it's information that says, are we, how do actual results come in against what we originally thought they were going to be projected? So no different than you do the fiscal operating budget. This is again, you have to go back to the structure of the contract, which is the calendar year.
Mhm.
And that's all I'm asking is just to look at our original cost projections against what actually happened. And do I know if there's anything to be changed? Until I get the data, I don't know.
You don't know. Okay.
I'm just, I want to see what it says, and it may tell us something and it may say everything's fine.
Right. So in a perfect world, what would it look like?
I mean, the numbers or the presentation?
The numbers, I guess what I'm hearing you say is like, you're looking to identify a gap between projected and actual.
Well, okay, so
And then the follow-up point would be that there usually is a gap for a variety of reasons. Beginning of the year, and please correct me if I'm wrong, but you're making enrollment projections, number of people on a plan, and at the end of the year, there's going to be a variance.
correct. Right, and so your variance can come from head count,
Right,
and
and
it can come from the mix
number of claims, sure.
and number of claims. Okay. I think, and again, and so when you look at that and say, okay, how am I budgeting going into the next year? If there are factors, then am I taking those into consideration when I do my forward, what I'll call the fiscal year budget? So I don't want to get surprised at the back. What I'm trying to do is avoid a surprise at the back end that says, whoops, our health insurance costs came in 10% over and well, that's just what they were.
Has that ever happened? She has more history with this, so just to put it into context, I mean, so how does that work? Sorry to put you on the spot,
No.
Jennifer, but
It's fine.
yeah,
The projections that we get from Lockton in order to determine this internal budget within the health insurance fund, right? Because there's two different budgets. There's the budget from operating to fund this, and then the budget within here. So those projections from that are a combination of information from Lockton, and in this case, Blue Cross, are taking into account 3 years worth of our claims history, So of our group. 70% for the previous 12 months, 20% for the 12 months prior to that, 10% for the 12 months prior to that. The industry standards for, are applied for medical trend, pharmacy trend, which includes inflation. And the projections that Lockton provide us then are based on what they see the trend is in our enrollment. So how many individual employees, how many total members, and then we use those numbers. I think not this previous budget year, but the budget year before that, we knew that we were going to be hiring because we'd been holding off hiring during COVID. And so we saw like an adjustment we saw us not spending what was in the health insurance fund, right? Because we had fewer people. And so we actually adjusted Lockton's projections based on that enrollment, so that when we're budgeting within this fund, that we're looking at who we actually expect to see be enrolled in the plan. And so when we do this budget, Lockton will then also take, they give us a fiscal year projection as well. So that's how we get here. We're seeing a variance here because we made a decision to at the beginning of the calendar year to try to save money on that stop loss premium. So you're seeing a 36% there because we could see a trend also in our claims where we knew that would be helpful. We've given presentations that have all of that information to personnel. I think here before last when we went out to market, because we try to go to market every 3 years if we can. But I don't know what additional information. So are you wanting to see this report, but for calendar year?
Yes.
Like this fund
I think
accounting?
a simple report of 22, 23
Okay.
and 22, 23 and
So
what are,
how many we expected to be enrolled or,
you could,
because that's what the numbers will be based on. I mean,
and it's just a case of looking, again, you've just gone through all the assumptions that are made, okay?
Yeah.
So the purpose is to say, we made a bunch of assumptions, okay? This is what we projected our plan cost to be and all those components, okay? This is where we ended up.
so part of why we are.
And we don't have to go down into all the assumptions. It says, we were pretty good on our head count, and our mixed ratios, but our claims came in higher. Right?
Yeah, and which is, that is part of the presentation we do for personnel when we do the plan. And part of, there were multiple reasons we moved from actually having a fiscal year plan to having a calendar year plan in, I want to say around 2008, 2009, somewhere in there. But when it's been particularly helpful to be self-insured, this model, this cost plus self-insured model, to have it be offset because we can make adjustments in order to make sure that we are the budget, that the operating budget that we fund this with, that's gonna be sufficient and that we're gonna stay within those min maxes that are per the board policy. So we can make adjustments mid-year in order to stay within that budget and keep our fund correct.
So you're saying that in the presentations in the personnel committee have looked at the actual results for a plan?
They haven't looked at, well, yeah, I would say we have looked at results because we've looked at like what we expected to happen. Ultimately, the change in net position versus what we expect versus what's happening is kind of the final exam grade, right? For how, what we thought was going to happen in this fund over the course of the year. But yeah, there's so many levers. That's why I'm trying to figure out what we want to show. So many levers that affect that.
So, okay, so I don't overcomplicate this, okay? Because it needs to be fairly simple. So I think this is kind of like personnel schedule. We'll put something together, see what it says. You don't like it, we'll change it. But again, if you have this in the personnel detail, then can I just ask you to send it to me?
Yeah, so it's not going to be as like that, the simple side by side that you're talking about, because everything that we that we.
Again, all I'm looking for is actual historical results for, if you're saying they have this for 3 or 4 years, then whatever they have.
And then the only thing that I'm trying to figure out from your question is, are you looking for what it would look like if we closed the fund completely out?
No, I'm just looking to see what our initial projection is against actual results. That's all.
And
So if you think about, an insurance company.
Yeah.
That has, what I'll call longer duration policies, take a medical liability company, all right? Health insurance tends to be short term, right? But if you take a medical liability company, they have long tails on those claims. So when you look at a calendar year, or if you look at a fiscal year statement, okay, like we have here, then you have a whole bunch of activities from multiple policy years coming into play, right? So what the company does is go back and look at each of those, what I'll call policy issue years or accident years, okay? However, it's defined on the thing. And you look at all those separately to say, okay, it all rolls up and this is what happened to the fiscal period. But I go back on each of those to assess, was my pricing correct? Were my claims estimates, was I off on that? Whatever the case may be. Okay. So we don't need to go back 15 years. I'm just saying, but
so
going back.
when Lofton reports out to us, on the experience report, they give us, what the enrollment actually was for the month, what the fixed costs were, because those are going to be based on how many people and members were enrolled at what tier. And then they give us an expected claims amount, which is, based on the same data that we use for projections, but adjusted for who's actually enrolled at the time. So we can compare what claims actually came in, what would have been expected to come in. So some version of that aggregated to because the information I get from them, of course, includes every lever separated out.
It may be easier just to get the data first, whatever they provide,
Okay.
and we'll go from there.
Okay.
How's that?
Well,
Because I'm hesitant to say I want X because X may be, X version 2, version 3, version 4.
Well, the reason why I'm asking is because I don't want to spend a lot of time reporting out on something and then and putting something together and it just be.
No, I'm just asking for what Lockton.
So I want to know what we're looking for.
I'm just asking for what Lockton has provided you.
So that's other than the report that I sent you the other day, or is that?
That's one report. I don't know what else there is.
All right. So Jennifer, as I told you though, we'll be mindful of personal information to make sure that it's stripped out because it relates to individuals. And just so, are we asking for a new report to be generated on a monthly basis? Or is this just
No, this is once a year, maybe you get done like at this time of year and you say, okay, this is where we think we are. And then when you get closer to the renewal cycle, you say, this is how it actually.
Well, that probably is what I have for personnel committee. So I can go back and have.
Yeah, I don't want you to create anything.
What I provided to the personnel committee and see how close we are.
Well, again, I will take the time to look at what currently exists. So you don't have to spend any time. Okay.
Okay.
I think this is a very simple analysis. Honestly, Lockton, should be able to do this in 30 minutes or less.
We
Okay?
get reports from Lockton every month and then several different kinds of reports throughout the year that even take deep dives into.
Yeah, I'm not
all
asking
kinds of
for that.
things. So
This is very high level. Okay, top, and I'm not asking for any individual data, any personnel data, nothing. Okay, this is strictly a financial analysis.
okay, so this sounds like it'll take a little bit of time for both you and Jeremy. So is it reasonable to assume that you could have this by next month?
If I can, I don't think, I don't want them to spend any time. Okay, I will look at the reports and I will come back to you.
You're asking for our time, this whole, and so I'm just trying to get a sense as to how much time it takes. So we get it to you in a reasonable amount. Anyway, what I don't want to do is lose sight of it. We're very busy with budgeting and I just want to make sure we get you what you need.
Well, if it's on board docs, I just need to be pointed to where it
No,
is.
because, you know, a lot of what we get from Lockton will have, it has a lot of data that we have a responsibility to protect.
Yeah, I don't know.
So, I'll need to extract what is appropriate to have available.
I'll tell you what, I will mock up a straw man format,
Okay,
okay? And I think Lockton will have this data and can just drop it in.
oh, I'm sure that they will. I mean, we've got.
So I think that the time burden will be on them, which again, this is not something they should know exactly what to do.
Okay,
Okay,
Well, I get them, just. I assume this is primarily for our budgeting purposes. Because
It gets into
because it's
budgeting, yeah.
Fiscal versus, I know the
yeah,
insurance.
it gets into budgeting, so. Right.
So,
We spend, well, $4.5 million a year.
yeah, that's what I was gonna mention on the statement of activity. So is that pretty much done on a monthly basis?
Yeah.
Okay, so obviously for budgeting purposes, then obviously it's fairly easy to do that. If it's every month, just add it together, so we can, which I assume is what this is.
Yeah.
So at budget time, and I guess personnel. I think the finance committee gets this last, is that correct, in the actual budgeting process? Yeah, so by that time, you can, we're way into the fiscal year, obviously, when we see this again, when this committee sees it again, so. Yeah, I don't want a lot of time spent. See, but it looks like if it's on a monthly basis, I just would add up the months. And obviously, we're 2 months away from the fiscal year or whatever it is when you make a decision. Actually, I guess the actual decision is within a month, but. Anyway,
Well, it's okay, I'm gonna make another comment. So the budget we're going to approve in June has to include a cost projection for fiscal year 25. We don't know what the rates are going to be, we don't know what the mix is going to be. So when you, again, you do a look back, so unfortunately actuaries do look back so they can look forward. Okay. So you just have to understand where you are historically, so you're making the appropriate adjustments into the next fiscal year. That's the purpose of this. Again, I don't want to overcomplicate it. If we're not going to get into individual details, it is high level only. And then, if there are details to get into, they can be pushed back down into, whatever channel it needs to be.
So should we be doing this as part of the budgeting process or as part of the renewal process?
I would
Because we do,
probably say both.
we rerun, the projection for this fund as part of the budgeting process. So I have the most updated projection. I get it usually right now to have as much up-to-date claims information so that the budget for this fund will be as much good data as we can get. And then, of course, we're doing that for the renewal process so that we're making a good financial decision that falls within the budget that we have. And usually as part of that process, when we take that information to personnel committee, that those same projections will be there. It'll have what our actual unrestricted is, what we're showing as being a projection for the spend for the rest of the fiscal year and for the calendar year. And then, so that we can show why, that we expect to be able to stay within the budget that we've been given. For the year, and that helps us. That's how we're to make those decisions. But yes, we do have updated projections. I don't know.
Again, I think the data's there. And I think Lockton has this. It's just a matter of presentation. That's it.
okay, so we're in agreement. We'll get it to you by the next committee meeting or before if possible.
And it would be good though, if you want to kind of show how you want it presented, because they have a way of presenting it. And they can help save us some time, likely.
If they have a presentation that makes sense,
You know.
then I'm not going to recreate with.
Well, I mean, if we're gonna be doing comparisons, that's what I'm trying to figure out, because my original projections I've got. That I have from them, but they're gonna be based on what they were also projecting for enrollment for an entire year. And so if we're doing that month by month, what are we meant to be showing? You know, I guess that's the thing, is that, yeah, it's there, but in what method do we want it presented? In what format do we want it presented in order to show this comparison?
Again, just. I'll mock something up.
Okay.
You know. Anyway, I've already said what I need to say.
All right.
Okay.
That's all I have for the financial presentation, unless there's any questions.
Okay, we have some other, do we not have other reports?
Yeah, the next
You're
one's
gonna go through all
the
this?
investment section.
Great.
Well, I don't really have any comments.
Well, it's just, I want to walk through so everybody, you know, has a chance to see it and make comments if they wish.
This is our investment report. The top is strictly for the capital project fund. Have any comments? And then the bottom is everything else, the operating fund, primarily the general fund, the debt service fund, all the funds are combined.
I take it there have been no sales of anything, we're just letting,
The last sale was in November. The next one, I don't think is.
but I mean, we're letting them roll off a maturity date.
Yeah.
We're not selling in advance, right?
Not selling in advance at this time.
All right.
I do have a question. In November, the 2.5 million. What was that transaction or series of transactions?
That's a sale of an investment and then transferring that cash back to the operating.
Yeah, and I just, again, clarification, I think that is a maturity as opposed to a sale.
Oh,
6.5 half dozen other.
Well,
You sell it at maturity. It's not a pre-sale, but it was sold at maturity. So we got our money back plus interest, transferred that to the operating account.
okay. Well, let's move on.
Next report is the capital plan. I don't believe there's anything significant to report here. No major changes or deviations since our last report. To answer any questions I can.
The total hasn't changed, I guess that's what I took, correct?
Right, the adjustment is that as the year expenditures increase, the projected
Right.
decrease, but they
Right.
did it at the same amount.
Okay.
And then lastly, Juan has updated the cash flow projection. I believe there's anything really significant to report from the last cash flow projection, but this goes out into the next fiscal year.
I did have a question on this because I didn't look back. The projected revenues for fiscal 25 are 63.7 million, and our actual projected for 24 is 66 million. So that says we're going to have a $2.3 million decrease in taxes. And then on the others, all the other revenues is about a $500,000 decrease. So that $5.7 million deficit showing November, if I just use flat numbers, would be about half of that. A little under 2.9. So
Yeah, I'll have to ask Juan. Again, I think his projections aren't necessarily budget, but when he thinks the revenue is going to come in.
well, but again, I'm looking at just the fiscal total and obviously the 24 has been updated for actual. But I guess if we think taxes are going to decrease, that's fine. So I just wanted to make sure that people looking at this are aware of that. Any questions on that? The personnel schedule, any comments on that, Aaron, Jennifer? However you want to handle that.
No comments on my end.
Did we add technology folks?
Sorry. what
Did
was
we
that?
add technology people against last year? That's the only one that's up significantly in terms of dollars.
Yes.
Is that a yes?
Yes.
Is that we added additional staff, or was that referring to the reorg?
Yeah, it's a reorg, so you can see
Right.
a little bit of some of that shifting would be coming from the public program side, but yes, that we.
Okay. All right, so a little bit of moving the chairs around. Yeah, gotcha, okay. Any questions, comments?
Yeah, actually, I guess I want to go back to topic right before. So
Cash flow?
cash flow.
Okay.
So is this projected now that I caught up with that? Are we projecting revenue decreases for next year?
Well, that was my question, because I think the numbers in here are, well, I don't know, because I didn't go back and check. My guess is they're probably the same numbers that were there in the previous presentations, and they have not been updated to reflect what the current tax collections are. So that's 63.6. I know when we did the original levy projection in September of 22, we projected taxes of a little over $64 million. So it's even below that. So this is probably a conservative estimate, very conservative. But again, I think we just need to get it updated because we run into the November deficit in terms of cash flow. So assuming the numbers stay flat with the current year and assuming the 3.5, 4 million there of revenues for the last 4 months and no change, then that deficit that's shown up there of 5.709 would be about half of that. So this will just have to be reworked from to get.
Well, I'd come up with another basis
So
for this.
we'll just defer that to the next meeting if that's okay.
Yeah,
We don't know, I mean, I don't know the answer.
but that's what it shows. A decline in projection.
That's what this schedule shows,
Yeah.
correct? Yes. Other questions or comments on the financial package? Michelle, Yummy, I don't know, Michelle, you ever join us?
Yes.
Okay. You have any comments or questions?
I'm here. I don't have any questions.
Just listening intently. This is Yummy.
Oh, Yummy, you're here, you're right next to me.
We're here in spirit, I know. Okay, let's move on to 6.1, just the status of the audit proposals. Is that you or Jeremy?
Yeah, so we submitted the RFP on February 9th to 9 firms. Basically, all of the firms that are currently doing audit work for anybody in this area, plus a few more that are Ingram's top 10 list. Only one declined to bid, so the other 8 are potentially still on the bid list. However, we did ask for questions from potential bidders, and only 2 vendors responded to that. We got those questions back out to them, and the bids are due tomorrow at 2 o'clock.
So who declined? I can ask.
Let's see, KPMG declined.
No nuisance.
Yeah. So they usually do much larger organizations, but since they did Jackson County and it's just down the street, I thought if you're already here. Nothing beats a failure but a try, right? So anyway, so we have 8 firms, that could potentially bid, 2, or I'm fairly certain will bid just based on.
So the
questions I
calendar
asked.
then looks like what? You'll have the proposals.
Yeah, we intend
For the next
to
meeting?
bring a recommendation to, the April
April
meeting.
meeting, okay. And then are they making presentations to you, or we already know who, I assume Hood is one of them. You don't have to tell me. But if we end up with 2, are you doing presentations or any type of a face, whether it's a Zoom or face-to-face interviews?
Yeah, so the finance staff was going to interview, the potential bidders and make a recommendation for the finance committee to consider.
Okay, any questions on that? Hearing none. Other business, the only thing I have on that is for the non-binding levy that needs to be approved by the board on Tuesday. Do you want?
Yeah,
This
Jeremy,
is, I think, well, go ahead and then we'll talk about history.
Well, yeah, so historically, the library has just said at the non-binding time, whatever the statutory max is. Last year, I believe, was the first time that the library said, we're not going to use the statutory max, we're going to use what we think will be the levy based on the rollback. And so our plan that we discussed at the last meeting was that we were going to make the presentation of the overview of the budget to the entire board so that they could weigh in on whether or not the non-binding levy for this fiscal year should maintain that voluntary rollback or remove it for purposes of trying to go through a budget process with as much information as possible.
Okay, I recall as a little, as a slight variation. And this goes back a few years, okay? Where I think they used to approve the, what's the right term, the statutory levy, which was 40 cents, and that's what was used for the non-binding, okay? I don't know if it was last year's different, and I think it was 2 years ago that there was pushback from the counties that, well, that's not the levy you used last year, so we set the non-binding at the, what I'll call the Hancock adjusted maximum. Okay. Last year was an exception because we had the voluntary reduction. So we knew we couldn't go over that, but again, it was subject to Hancock. So I think for this time, because we go back to the original 40 cents, we're going to get phone calls. Is to set the non-binding at the, what I'll call the Hancock adjusted level. Because we don't have budget done and I don't know that it's prudent to make some estimate until that's done.
Right.
So am I correct then that just from more of a procedural standpoint, we're going to present the, what I'll call the Hancock adjusted maximum?
Without the voluntary reduction.
Without the
Yes.
voluntary reduction, is
Yeah.
that correct?
Yeah.
Okay, all right,
And we've currently got that pegged at 0.3116.
right. And that's the calculation that is in the, if you want the 5 pages.
Right.
That's the form that is filled out and it produces a result.
Yeah.
And that's what is on file with the counties.
Correct.
As well as the voluntary reduction, but that 3116 is also in that document,
Right.
correct? Yes.
Yep.
Okay. That makes sense, Yummy, Michelle?
Yep, it does.
Okay. Okay, So I don't know that we didn't have a scheduled vote. I don't know that we have to. Is there any question on it? Consensus is that's what we proceed with?
Hancock?
Yes.
Yeah.
Okay.
You do remember that the initiative petition, Hancock was an initiative petition. I'm just saying that the initiative petition process worked. That's for future discussion. I just wanted to point it out. But yes, yeah, the Hancock version, yeah.
Okay, so the consensus is the board will, what staff will present to the board is the 3116, which is the Hancock adjusted statutory levy. Okay,
We've prepared a memo that'll kind of lay it out for everybody in writing, so the public can see it also.
yeah, so it's, I mean, it's just. Okay. Any other business or questions or comments? Hearing none, I ask for motion to adjourn.
I move the Finance and Audit Committee meeting be adjourned.
Second,
And any further comments? Otherwise, Teresa, I'll let you take the vote.
Trustee Wykoff,
aye.
trustee Thies,
Yes.
trustee Pandolfi,
Aye.
trustee Cook,